Did Dr. Michael Burry just bet against Tesla?
Excuse me, Dr. Burry, it seems like a foolish investment.
Well, based on prevailing sentiment of the market, banks, and popular culture, yes, it's a foolish investment, but everyone's wrong.
That's a good one.
Check out what the good doctor wrote on Twitter last week. So, at Elon Musk, yes, I'm short Tesla, but some free advice for a good guy. Seriously, issue 25 to 50% of your shares at the current ridiculous price, which is, $6.28, $6.29 per share, setting new all-time highs. That's not dilution. You'd be cementing permanence and untold optionality. If there are buyers, sell that #Tesla souffle. What the big short investor is referring to is a December the 1st leaked email in which Elon Musk said, when looking at our actual profitability, talking about Tesla, it is very low at around 1% for the past year. Investors are giving us a lot of credit for future profits, but if at any point they conclude that's not going to happen, our stock will immediately get crushed like a souffle under a sledgehammer. So Burry is referencing that very quote. And we shouldn't think that Burry is picking on Elon Musk in any way. If anything, Burry is revealing his credentials here as a value investor. Here we have a quote from 20 years ago in which Burry cautions against following the crowd when it comes to investing. Many stocks remain overvalued and speculative excess, both on the upside and on the downside, is embedded in the frenzy around stocks of all stripes. And if we look here at the graph which shows us the world's largest automakers by market capitalization, we see that Tesla is right up at the top with over $568 billion of market capitalization, yet it sold 375,000 cars in 2019. So it's the market leader, and you can see how its stock has climbed upwards since 2013, spiking up hugely in 2020. Now we look at its nearest competitor, Toyota. The graph reveals that Toyota sold 10.6 million cars on a worldwide basis. Compare that with Tesla's 375,000. We can see that for every one Tesla that was sold, 28 Toyotas were sold. Volkswagen sold 10.9 million cars globally last year, which means that 29 Volkswagens were sold for every Tesla that was sold. We can go down the line with this. Honda, 14 Hondas were sold for every Tesla that was sold. BMW, nearly 7 BMWs were sold for every Tesla that was sold. And yet we have this completely enormous market capitalization, which appears to be utterly disconnected from fundamentals. And interestingly, Michael Burry illustrated this by including this table in which he adds up all of the market capitalizations of about 30 plus automakers in the world, the biggest ones, comes to a figure of $991 billion, and Tesla's market cap is $646 billion. Therefore, you would expect that if Tesla has this big a market cap, its actual revenues should be way higher. However, they're about 1/90th of all of the income from the other companies added together. A lot of the content on YouTube on this topic starts by talking about Tesla. It says Tesla is so much more than a car company. It's a hardware company first, a software company second, a battery company third, and a car company fourth. That's the usual order that we're told. Plenty of die-hard enthusiasts claim it's the best in class in all of these categories. They extol the virtues of Tesla's autonomous driving capabilities and its work on batteries. They say Musk is a visionary and Tesla has an unchallenged moat in the electric vehicle space. And don't get me wrong, I enjoy watching this content, and you won't hear me say anything negative about these contributors or about Elon Musk. Although I do have to admit, until at least 2015, I was convinced that Elon Musk was some kind of aftershave.
Time to musk up. Wow. Never ceases to amaze me. What cologne you gonna go with? London Gentleman or... Wait. No. Hold on. Blackbeard's Delight.
But what could be more inspirational than a creative leader laying out a future in which flights to Mars are as routine as your custom Tesla self-navigating from assembly line to your drive mere moments after you buy online? Tesla's rise in 2020 has been nothing short of remarkable, and if you're an early investor, congratulations. There's no shortage of Tesla lovers out there who adore the brand, are convinced of its long-term upside potential, and will cheerlead for it no matter what. And amid all of the bullish factors and positive media coverage, there's no denying that few can top Musk when it comes to gumption and marketing skill. Is it possible, though, that the cult of personality around Musk, perhaps due to SpaceX, PayPal, or his other successes, has persuaded people to buy into Tesla stock to the neglect of a serious consideration of the fundamentals of the company? Perhaps they conclude that Musk's wizard-like creativity is the source of Tesla's future success. This may be correct. After all, it was only by welcoming Steve Jobs back that Apple was able to revive its fortunes. Only those with a compelling vision of the future can improve the world meaningfully. And never is this more critical than when you're CEO of a multi-billion-dollar big tech corporation. There's no question that based on his track record for generating crazy ideas and implementing them, it would be foolish to bet against Musk's ability to repeat this process again. Nevertheless, attaching a premium to Musk's talent is not the same as evaluating Tesla's fundamentals. Enter Michael Burry. As things stand right now, Tesla's share price is insane. It's gone up 800% in 2020 alone, and is out of alignment with the company's sales figures as well as research progress and product development timelines. Musk is widely quoted as saying that people should aim to achieve their 10-year goals in 6 months, because even if you fail, you'll still be far ahead of many of your competitors or peers who don't even try. Far be it from me to pour cold water over a company's ambitious plans.
This is worse than the time the raccoon got in the copier!
Rather than getting into any kind of pro-Tesla versus anti-Tesla grudge match, it's more helpful to remember that when Burry comments on companies, he does so from the perspective of a value investor. We should never forget his obsession with hunting out diamonds in the rough, bargain basement offerings that have been overlooked or underappreciated by the market. Tesla is neither. In 2018 and 2019, Tesla has had flat profitability. Sentiment is huge, but their fundamentals and their revenues have stayed consistent during this period when their shares have ballooned in value. There has also been a short squeeze, but back in September the short interest declined to the lowest point in the company's history, and many of the shorts had been squeezed out because the stock price doesn't show any signs of retreating. Another big tech company we might look to for comparison purposes is Amazon. Amazon is a wide moat tech business, which certainly is a challenging company to value from an earnings perspective. However, if you look at operating cash flows, they actually trade at a fairly consistent valuation, and as a result, their stock price has generally gone up in line with the fundamentals of the company during recent years. This got a little stretched in 2020. Occasionally they had got a bit ahead of themselves at various times, but there has usually been some consistency evident. It was simply never the case that the fundamentals of Amazon were doing one thing and their stock price was doing something radically different, whereas that has been the case with Tesla, and to some extent with Apple. Apple, however, is profitable unlike Tesla, but over the past 6 months, there has been a very big disconnect developing between the current valuation of Tesla and even the most optimistic long-term forward-looking cash flow projections, which means that the present stock price level of Tesla is just too high.
It stings the nostrils.
And Burry knows this, and Musk knows it, which is why he said in his email that the share price could get crushed unless they can make the cars more cheaply and actually sell enough of the things so that they can finally turn a profit. And Burry knows that Musk knows that Tesla's shares are overvalued, which is why he suggested to Musk that he sells his shares for the current ridiculous price. Musk actually owns over 20% of all of the shares in Tesla. His brother Kimball actually sold his Tesla shares, technically speaking before he bought them, according to this article, raking in $8 million in the process.
Hey, Lawrence. I just know how to read numbers.
How big's your short position right now?
Just the 1.3 billion.
And the premiums?
Well, we pay roughly 80 to 90 million each year, which is high, but I was the first to do this trade. Watch, it will pay. I may have been early, but I'm not wrong.
It's the same thing! It's the same thing, Mike.
So the idea behind short selling in the case of Tesla is that Burry has borrowed some Tesla shares, we don't know exactly how many, at this huge valuation, and he has sold those shares, and he will buy the shares back when the value of the stock drops. So while we don't know what the precise parameters of this trade are as far as how many shares he has sold and when this took place, how many he will buy back or when, what the premiums were for borrowing the shares to sell, etc., we still know that what is going to happen is that he will pocket the difference between the high price that he sold them for and the lower price at which he will buy them back, less any fees, premiums, or sales taxes, etc. Why is all of this so interesting? I think it's because If I was to summarize Burry's perspective on these matters, I would say Burry's expertise in investing, which he continues to hone and sharpen with each passing month, makes him highly attuned to all manner of traps and discrepancies and opportunities which most likely would just go over the head of the average person. Burry knows that what somebody will pay for an asset at any given moment, whether that's a coin, a mortgage, a share, a piece of land, you name it, and what that asset is actually worth, are seldom in complete alignment and are often subject to distortion. For instance, when there's a mania and everyone rushes in to buy, which bids up prices, or when banks throw their lending standards out of the window and people with no job or savings get a low interest rate mortgage which later blows up in their face, or when companies which make consistent profits without fanfare are overlooked by investors who would rather park money into the top 5 tech companies. And there has never been a time when they've been so overvalued. You have to go back about 40 years to find a time when the top 5 companies in the S&P 500 had as big of a share of the market as they do right now. So Burry's skill set revolves around exploiting the misalignment between short-term perceived value and long-term intrinsic value.
And you're worried we won't pay you.
Yes, that's correct.
It sounds like an obvious thing to say, but leveraging this difference for profit isn't always straightforward, because it's far from guaranteed, even with the best executives on board, that a company's fortunes can be revitalized to align with the needs of customers and to recapture market share. Human creativity is the source of all civilizational advancement. Pointing out that Tesla's shares are overpriced in no way detracts from this truth. It's not impossible that the company's performance in terms of revenue generation will eventually catch up with its share price. But in the meantime, the bulls will keep buying, and as Taylor Swift once so eloquently opined, the haters are going to hate. As the original Tesla himself put it so beautifully, if your hate could be turned into electricity, it would light up the whole world. As Tupac once said, always do your best, don't let the pressure make you panic. Wise words from the deceased rap megastar, words from which many of us can draw comfort and strength. So yes, it will be interesting. We'll have to watch to see if Tesla is able to meet the expectations of so many hyped up and enthusiastic shareholders. Time will tell. But whatever happens, one thing's for sure. Michael Burry will be watching. Thanks for tuning in. Hope to see you soon. All the very best.